year students to the massive open online course on money and financial markets. In today's module, we are going to talk about an industry in the financial sector of the Indian economy which we had not touched upon before. But nonetheless, it is a very, very important component of the Indian financial sector. And the name of that industry is the mutual fund industry. In today's module, we are going to thoroughly explore the mutual fund industry in the context of the Indian economy. In today's module, we are going to explore the landscape of the Indian economy with respect to the performance of the mutual fund industry. And we would also explain in details the opportunities and challenges that are faced by the mutual fund industry in India. We all know that India has a diversified financial sector which has been undergoing rapid expansion, both in terms of strong growth of the existing financial services firms and also with respect to new entities who are entering into the financial market. The sector comprises of commercial banks, insurance companies, non-banking financial companies, cooperatives, pension funds, mutual funds, and various other small financial entities. The banking regulator has allowed new entities also in the system, such as the payment banks, to be created, thereby adding to the type of entities that are operating in the Indian financial sector. However, we can say that the Indian financial sector is predominantly a banking sector, with commercial bank which accounts for more than 64% of the total assets that are held by the financial system. Now, when we come to the various reforms that has been introduced by the government of India, we find that in the wake of the 1991 reforms, the government of India has introduced several reforms to liberalize, regulate, and enhance the financial sector industry in the country. The government and the RBI have taken various measures to facilitate easy access to finance for all the micro, small, and medium-scale enterprises too. And these measures basically include the launching of the Credit Guarantee Fund scheme for the MSMEs, issuing guidelines to banks regarding collateral requirements, and setting up of the Micro Unit Development and Refinance Agency, which is popularly called Mudra. So, in the context of the Indian financial markets, what we find that there has been a combined push by the government and also by the private sector. And at this point of time, we can undoubtedly say that India is one of the world's most vibrant capital markets. But when we try to explore further in terms of India's growing capital markets, what do we see? That investors in general, they like predictability. They basically abhor or dislike uncertainty. So investors like predictability in much more higher amounts in regard to their return on investments, and any sort of price fluctuations or volatility in returns is what they dislike. And there is also a tendency amongst most of the Indian people is that they like to own their assets in physical forms. So if we look at the household share or pattern of investment in Indian households, we will find that most of them possess assets in conventional forms, such as investment in fixed deposits, investments in gold, investments in real estates. So these are something which they like to invest in because there is not much of uncertainty, there is predictability, and at the very same time, they are able to possess these assets in their physical forms. And when it comes to the concept of the mutual funds, the investors have a notion that mutual fund is something that is related to the stock market, and they perceive the stock market to be highly unpredictable and volatile, And this is one of the reasons why most of the investors have been averse in investing in the mutual fund industry. However, a gradual shift in investors' perception has been observed towards mutual funds because of their increasing awareness in the mutual fund sector. Investors of late have been realizing that with their growing aspirations, they are really finding it very difficult to manage their financial goals through the conventional type of investments that are there in vogue in the market. Therefore, they have consistently been trying to explore newer and more efficient methods of investing. So, going with the change in the mindset of the investors, we did witness a significant amount of growth in the mutual fund participation, because mutual funds offer solutions to a varied group of investors which enable them to realize their financial needs, requirements, and aspirations. If we try now to look at the mutual fund industry in India, we try to look at what is the history of the mutual fund industry in India, which basically started off by the government, by the establishment of the Unit Trust of India, UTI, back in 1963. In 1964, we find the launch of the first scheme of Unit Trust of India, which is called the UTI Unit Scheme. In 1987, public sector fund houses started entering, and we have the SBI Mutual Fund as the first public sector unit fund house to be established. In 1993, private sector fund houses started entering the mutual fund sector just after liberalization. Franklin Templeton, which was erstwhile the Kothari pioneer, was a first private sector fund house that entered the Indian mutual fund industry. So for a long 10 years, that's from 1993 to 2003, we found large number of development taking place in the mutual fund industry in that decade. SEBI, we have already discussed SEBI in our previous modules. We know that within this period of time, SEBI has taken over the regulation of the mutual funds, and the industry also witnessed several mergers and acquisitions, and also the establishment of foreign funds. From 2009, removal of entry load was executed in the industry. 2012, TER, that is a total expense ratio, which was used for investor education, that was introduced, and a very, very important scheme was launched in the mutual fund industry, which was called RGESS scheme, that is Rajiv Gandhi Equity Savings Scheme. This was launched in 2012. 2013, we have the security transaction tax for equity funds, and the security transaction tax was basically reduced, and a direct plan for mutual fund schemes was launched. So till then, mutual funds were not being using the direct schemes, but a direct mutual fund scheme was launched. 2014, the definition of long-term was changed to 36 months from 12 months for a debt mutual fund. Section 80C limit exemption was increased to 1.5 lakh rupees. In 2017, the tax benefits of the Rajiv Gandhi Equity Savings Schemes was discontinued. SEBI recategorized the mutual fund, which needs to be implemented by the fund houses. So more or less, this was the chronological ordering of the mutual fund industry in the context of the Indian economy. But before I go into further details, we need to understand what is exactly certain macro parameters with respect to the Indian economy. First and foremost, whenever I talk about mutual fund, the most important thing is the savings rate of the household sector. If I look at the gross savings, we find that in 2021-22, gross savings in the Indian economy had increased to 30% from 29% in the previous year, that's 2020-21. And this ratio is supposed to have crossed 33% in 22-23. Supposed to have crossed 31% in 22-23. This is the highest since 2018-19 that has been observed. Out of this gross savings, it is the household savings which has increased sharply during the pandemic period on account of sharp accretion of financial savings such as deposits. While household financial savings have since then moderated from 15.4% in 2021 to around 11.1% in 22-23, savings in physical assets have grown sharply to around 11.8% in 21-22 from around 10.7% in 2021. So it's a growth of around 1 percentage point. Along with this, we need also to understand what is the number of ultra high net worth individuals in the country. They are UHNWI individuals, ultra high net worth individuals, and these have estimated to increase from 13,367 in 2021 to around 19,000 in 2026. So these high net worth individuals are also going to rise. So it's going to be an expansion of around 39% in the next 5 years. So if such high net worth individuals rises in the economy, we need to have avenues where they are going to invest this money, and mutual fund is a very, very good sector in that respect. Next, we come to the AUM, that is assets under management under the mutual fund industry. Now, the total market value of the investments or assets that are maintained by the mutual fund, hedge fund, wealth management firm, portfolio manager, or other financial services firm, this is called AUM or assets under management. In other words, assets under management refer to the total amount of money that is controlled by the person or the entity. In some cases, we find that the AUM refers to the total value of all assets managed by an entity for all the clients that it has. For example, AUM stands for assets under management, which refers to the total value of assets which are managed for specific clients. Let us look at the performance of AUM with respect to the Indian mutual fund industry. I am giving the latest figure. As of January 2023, AUM managed by the mutual fund industry stood at around 39.62 trillion rupees. If I translate it into US dollars, it comes to around 478.08 billion US dollars. The AUM of the Indian mutual fund industry has grown from around 8.26 trillion rupees in January 2013 to around 39.62 trillion rupees in January 23. So within this 10-year period, we find around more than a 4.5 times jump in the, the AUM growth. The mutual funds industry's AUM has grown from, if I talk in terms of US dollars, it is from $100 billion US in 2013 to around 478 billion US dollars in 2023. The fiscal year 23 witnessed a lackluster flow of also the IPOs. So this also is very much important to understand where does the Indian economy stand. Now, though we have in the fiscal year 22, it was a very all-time high performance of the IPOs at around 1,11,547 crore rupees, but this basically slowed down in 2023. It was a lackluster flow in 2023. However, the largest life insurer in India, LIC, their IPOs accounted for around 39% of the total fundraising in the fiscal year 23. Why I talked of the IPO in this respect is because we know the mutual fund houses have their investments in the equity markets. So we need to understand that what are the new equities that have flooded in the Indian market in 2021, 22, 23 and so on, to really understand in which direction the mutual fund industry is going. As I was talking about the AUM, we find the AUM of the Indian mutual fund industry in 2023 was standing at around 43 lakh crore rupees, and this has grown quite around a five-fold increase in a span of around 10 years. And if I talk about the total number of folios, I'm not talking about the total values, but I'm talking about the total number of folios that has been created. This is a mutual fund parlance. We find in 2021, the mutual fund industry first crossed over 10 crore folios that has been created by the mutual fund industry in India. And in 2023, this 10 crore increased to around 14.74 crore folios. And while the number of folios under equity, hybrid, and solution-oriented schemes were divided accordingly, and the maximum investment is generally from the retail investors, which stood at around 11.76 crores. Another very important point that needs to be mentioned here is that in November 2020, an agreement with the World Bank was signed with the Department of Investment and Public Asset Management, which is called the DIPAM, D-I-P-A-M. Under the agreement, the World Bank is expected to provide DIPAM with asset monetization advisory services. This project has been established to encourage and speed up the monetization of non-core assets and help unlock the values of those unused or marginally used assets that have the potential to dramatically increase financial capital for further investment and development. So all these things comes under the total mutual, within the ambit of the mutual fund world. Now, another very important aspect is that of SIP. We usually hear about people taking out SIPs in mutual fund. What exactly is that? This is the systematic investment plan, or SIP, and it is commonly an investment plan or a methodology which is offered by the mutual funds, wherein one could invest a fixed amount in a mutual fund scheme periodically at fixed intervals, say once a month, instead of making a lump sum investment. The SIP installment can be as small as 500 rupees per month, and SIP is something which is similar to recurring deposits, which we usually take out in banks, where you deposit a small amount or a fixed amount of money every month. Now, we can very well understand that SIP is really a very convenient method of investing in mutual funds through standing instructions to debit your bank account every month without the hassle of having to write out a check each time. So SIP has really gained popularity amongst the Indian mutual fund investors, as it helps in cost averaging, the rupee cost averaging, and also in investing in a disciplined manner without worrying about market volatility and also without worrying about the timing of the market. Now, if I give you the recent figures or the latest figures in terms of SIP, mutual fund SIP accounts, the total number of SIP accounts stood at around 6.53 crores in India in 2023. And the total amount that has been collected through SIP by the end of March 2023 was around 14,749 crore rupees. So this is something which is extremely important for us to understand, and also help us to show the direction in which the mutual fund sector industry is progressing. Now, I would like also to give you an idea about the breakdown of the investors in the mutual fund industry. Of course, the corporate investors are by far the largest investor in the mutual fund category. However, the value of the assets which are held by the individual investors in mutual fund has increased from around 17.18 lakh crores in February 2021 to around 21.02 lakh crores in 2022 February, and this increase is around an increase of around 22.32%. The value of institutional assets have increased from 15.11 lakh crores in February 2021 to around 17.54 lakh crores in February 22, which is an increase of around 16.08%. If I try to look at the investor breakdown as of March 2021, we find, as I have already said, that the largest is that of the corporates, which has a share of around 43% in the mutual fund investments, while the next one is obviously the banks and financial institutions, who has around 22.4%, and 1% is from the high net worth individual, while retail investors come to around 32.6%. I have just explained about what exactly SIP means. Now, if I look into this chart, we can see the SIP contribution chart here of the various years in the Indian economy. If you look from 23-24, this is the latest figure that we have, and throughout the years from 2016-17, the chart provides us with the figures where we see that there has been a consistent increase in the amount of SIP contribution in crore rupees in the Indian economy. So 22-23 we have 1,55,972 crore rupees of SIP contribution. The most important contribution in the mutual fund industry comes from the corporate investors. They are the largest investor in the mutual funds category. The value of the assets that are held by the individual investors in mutual fund have really increased from around 17.18 lakh crores in February 2021 to around 21.02 lakh crores in February 2022, which is an increase of around 22.32 percentage points. Next, we come to the concept of the asset management companies. An asset management company is a company that invests financial assets like funds and money from the investors, from other companies or other AMCs in companies, and they use those assets as a financial investment, operational investment, or any other type of investment to grow that particular investment. Following that, the returns are due to the actual investor, with a small portion of the returns are generally held back as fees that are charged by the AMCs. An AMC company may manage several funds with various investment and financial objectives. Fund managers usually manage these, set the financial and investment goals, assess the risks and the reward profile, and then choose an investment strategy. If we look at the asset management companies that are there in the Indian mutual fund industry, you can see this chart here where I have given as of 31st March 2023, which are the asset management companies in terms of their ranking. We have the SBI Mutual Fund, which comes as number 1 AMC and manages asset of around 700,990.72 crore rupees. And then we have the ICICI Prudential Mutual Fund, the HDFC Mutual Fund, the Nippon India Mutual Fund, the Kotak Mahindra Mutual Fund, Aditya Birla Sun Life Mutual Fund, Axis Mutual Fund, UTI Mutual Fund, Bandhan Mutual Fund, and 10th we have the DSP Mutual Fund. This is according to the performance of these AMCs as on 31st March 2023. Lastly, now we come to the challenges that are faced by the mutual fund industry. The Indian mutual fund industry finds itself in an economic landscape which has undergone rapid changes. However, there is a strong reason to believe that the Indian mutual fund industry has not yet seen its global peak. And if proper measures are taken, the industry could get back on a very high growth path. But one of the biggest challenges that the mutual fund industry in the Indian economy faces is a lack of healthy participation. Now, while the large population which is moving towards economic well-being, they promise to become very strong customer base for the financial services, it also poses a high degree of challenge to the service providers in tapping resources, because a large proportion of these people live beyond the cities. And so mutual funds faces a double challenge. Firstly, increasing their share of pie in the urban market that have seen crowding of products and vendors, and secondly, capturing the attention of investors in the suburban and in the rural markets that have been largely averse to any type of complex financial instruments and are often unreachable through the traditional distributional channels. So mutual fund will have to leverage technology to drive innovation in products and adopt alternate distribution channels to be successful in the Indian market. If I come to the penetration of the Indian mutual fund industry, we can say it's abysmally low. The Indian mutual fund AUM to the GDP ratio is significantly lower at around 15.9%, and this is a figure I'm talking about from March 2022. Compared to the world's average, you'll be astounded to know the world's average is around 75%. In fact, India's AUM to the GDP ratio is much lower than many developed economies of the world, such as US. US has it at 148.9%. UK has it at around 74.8%, whereas in India we are standing at around only 15.9%. If we look at the Southeast Asian countries, even Hong Kong, Singapore, they have the highest mutual fund penetration of around more than even that of US. Their mutual fund penetration is around 179.9%. Indonesia and Philippines have the lowest mutual fund penetration. Indonesia is around 3.8%, much lower than that of India, while Philippines has only 2.3%. But India is an emerging market, developing economy. We cannot keep ourselves within that bracket of such low AUM penetration. Let us look at our neighbor, China. They have an AUM to GDP ratio of around 20.9%. So just a bit higher than that of India. Further, the ratio of the equity mutual fund AUM to GDP in India, also the equity, if you look at the equity mutual fund AUM, it is also very low. In India, it is at 8%, while at US it is around 98%. However, we can say that there has been also a growth in AUM to GDP ratio, because in 2022 itself we had a record high inflow in the mutual fund industry. There had been a rally in the equity market in the post-pandemic times, and a hit on India's GDP due to the pandemic. So because there was cash inflow in the mutual fund industry, as also the GDP of the Indian economy had gone down due to the pandemic, so the AUM by GDP ratio, that has improved from 2022 onwards. So this is another very important point. Overall, we can say that the penetration of mutual funds industry in India is extremely important, and this is an opportunity to earn annuity income once a fund builds up a good book of assets. And so these are very important, attractions for players to enter into the Indian mutual fund industry. But when we try to look into try to delve deeper, what do we find? That this under-penetration of the mutual fund industry is mainly because of low financial inclusion of Indian masses. Okay, and this is a structural problem which is deep into our Indian financial structure, because more than half of India's population does not have access to formal banking services. So RBI has already looked into this issue. For RBI, financial inclusion has long been a priority for the policymakers in India. Okay, we find that the RBI has permitted the banks to use the services of business facilitators and business correspondents. They have rolled out ultra small branches, USBs, in remote location as one of the steps being taken in the direction of financial inclusion direct cash transfer and linking that cash transfer with the Aadhaar accounts, that is another step forward that has been taken by the RBI, and this can also prove beneficial to the mutual fund houses in the long run. So with below poverty line individuals coming and trying to have their own bank accounts, the fund houses can use these existing bank channels to offer investment opportunities when these people start to earn something and has some extra funds for savings. So another very important thing here is that the advantage of having an active participation by the retail investors in mutual funds, this is just not limited only to the financial inclusion, because we have seen that institutional investors herd towards small cap and mid cap stocks which offer growth prospects, thereby increasing the depth and breadth of the Indian capital market. So institutional buying and selling of stocks also increases the price adjustment process in the capital markets, and they also will help to decrease the price volatility. So all these effects are extremely important to really put some sort of, some sort of drive to the mutual fund industry in the Indian economy. We can say that one of the main reasons behind this under-penetration of the mutual fund industry is a lack of financial literacy. So more emphasis has to be given to financial literacy of the Indian mass. Okay, and also the mutual fund products has to become more simplified for simple people to understand and invest in those products. That is also another very important thing. And whenever you have complex financial product, it is very beneficial for a well-informed investor, but it is highly intimidating to an investor who is barely financially literate. So we need to simplify and give them simplified products on their plate. And lastly, another very important aspect is the distributional efficiency and the number of agents. So another challenge that the AMCs face in India is increasing the efficiency of their distributional channels. So attracting new investors in small cities does not come very easy for these asset management companies. More money has to be spent on distribution and marketing for getting investments in the poorer districts in India. So we can end this module by saying that the mutual fund industry in India has really grown tremendously over the years. It was only 5 years ago that the industry started to have some amount of funds coming in, and today, we see that how fast it has grown. And this is due to the increasing demand for funds by investors. With increasing investment in other sectors like the real estate, gold and other commodities, people have become more comfortable investing in mutual funds. Many people have also realized that investing in mutual funds provides them with more flexibility as compared to traditional investment channels like bank deposits and fixed deposits. So, because if you want to make a withdrawal from mutual fund account, you can do so without having to worry about your savings losing value over time because of inflation or because of interest rate decreasing. So nowadays mutual fund is supposed to be a more comfortable and convenient way of investing, and we need to keep this tempo going on. Thank you.